If you work on Wall Street or any other major bank or a hedge fund or private equity firm, you know that to make $550,000, you need to make $1 million of pre-tax income, right? The employer withholds almost 50%, if not exactly 50%, especially if you're living in the city of New York, which I do. Hi, this is Shalabh Garg, Finance Dad. I have had jobs at a bank, at a hedge fund. I currently run my own hedge fund. And in today's podcast, I'm going to cover how to manage your taxes better. Now, I'm not a CPA, so I'm not going to get into the details of how to do paperwork. You can hire tons and tons of CPAs that can do that for you. But I'll tell you what I have learned in a 20 plus year career on Wall Street as to what works and what doesn't work, particularly from the vantage point of a Wall Street professional, and within that overall group, particularly with respect to a portfolio management job at a hedge fund. What you can do better to save taxes within the legal framework that exists in our great nation. First of all, if you are in a W-2 income, you know that employers withhold taxes, right? You make tons and tons of salary and bonus, and when you go to file taxes, you realize only about 50% is left over. Between the federal tax, the state tax, the city tax, there is no avoiding it because the employer is already withholding that tax. So what are you going to do about it? You have to pay it. And you make your peace with it, and you say to yourself, well, this is all I know. I know how to trade. I know how to work on Wall Street. What can I really do? Taxes are what they are, and I have to pay it. You know what? That's not really true. I did that 3/4 of my career working at a bank and then working at a hedge fund. And you're right, if you're in an employee job of that kind, one, you're taking the stress of getting fired, which as you grow older and more expensive, that stress will always be there. And second, if that wasn't enough, half your income is going to the government because that is how it's set up. And meanwhile, you look at it, the owners of your firm, you look at the partners, you look at examples of Steve Schwarzman owning Blackstone, you look at examples of Ken Griffin owning Citadel. None of them is taking a salary. They're taking no salary, they're taking very little cash bonus and making billions and billions of dollars and paying an effective tax rate, I promise you, no more than 10 to 15%. How are they able to do it? And is there really no way for you to do it? The answer is there is a way for you to do it. There is only one easy way. There's only really one way for you to do it, which is to incorporate yourself as an LLC. What does that mean? You know, when you work as an employee, your taxes have withheld at source, and hence you can't do anything about it. But if you did that same exact job that you're currently doing for your current employer, but as a contractor, let's say I'm Shalabh Garg, and instead of Shalabh Garg, the employee, I create a Shalabh Garg LLC that does the exact same job that I'm doing as an employee at my employer. Now all of a sudden, I don't have an income. The salary, employer, nothing changes for the employer, right? They pay the same amount of revenue, same amount of expense to Shalabh Garg LLC as they did Shalabh Garg the employee in the form of salary and bonus. That salary and bonus gets combined into what is known as revenue to the LLC that you created. But what changes for you as a result, what may seem like a minor change, what changes for you is that everything that you pay in terms of expenses. In fact, a lot of what you pay as expenses, whether it be your Ubers or your meals, or it be your transportation, or it be your clothes, or even be your maintenance of your apartment on which you have a mortgage on, because a lot of work you do is from home, can be expensed at the top line, thereby making it such that the effective tax rate comes down dramatically. All of a sudden, to make the same amount of after-tax dollars, you need to make half as much. I mean, I know it sounds too good to be true, but it is a fact. That is just how it is. I learned it for the first time when my wife incorporated her business as an LLC a few years ago. And whereas prior to it, we would file married jointly, now we would file married jointly, but file for her company against my pre-tax income as well. And now all of the expenses that she would have, often as a contractor, as part of that LLC, could be expensed against my pre-tax income, thereby bringing our effective tax rate down dramatically. And I just want to sort of point that out, that you don't even have to, if you're working at a bank or as an employee, or you're not able to sort of incorporate yourself in an LLC because your employer doesn't allow for it, your spouse can create an LLC of some kind. That LLC doesn't even have to be profitable. It could be something as simple as she is sort of taking care of pets, or some sort of nominal job, but one that can create an expense structure and expenses that can be mitigated against your income. So this is, I know that I'm getting to the details of sort of a lot of minutia, if you will. I do offer a consulting hour, as you know, so you can reach out to me using the box below you via email or any other format, and we can discuss strategies specific to your personal circumstances. But the main point I want to communicate to you is that do not think of it as complicated. Do not think of it as, oh my God, this is only for the rich. Oh my God, who's going to do all the paperwork? Really, the amount of paperwork involved is so trivial and so little, it'll surprise you once you've done it. And you know what? You have been doing the simpler taxes every year, right? How far has that gotten you? You pay half of your income, and you at the end of the year, you're left with half of what you earned, and you complain about it all the time, and it's not really achieved much, right? So why not try a slightly different vantage point and a slightly different way to accomplish that goal? I want to talk about how I discovered it. I discovered it when I started my own company, my own fund. And all of a sudden, I was doing the same job that I've done for 20 years, where I was investing, I was taking assets from clients, I was putting it into my strategies, investment strategies. But now I was paying my own health insurance, I was paying my own, and my family's as well. I was paying a couple of employees' salaries and their health insurance. I was paying for rent to the office and so on. And you know what? All of that is like an expense at the top line of the revenue. So all I had to do is to make sure that within the list that my CPA gave me of things that I can expense, and all of a sudden, the same income I had from prior years, and the net of it was so little after running of the businesses that my tax rate just came down dramatically. And I didn't even realize until I experienced this firsthand that I could have done this all these years prior as well, because in some of the employers that I was at, I was a partner and I was a part owner, and I could have expensed if I went down this route of an LLC at that time as well. So perhaps you can as well, particularly if you work at a hedge fund and you've just not gone down that route because it feels complicated, it feels like it's a lot of work, it feels like your employer may not be amenable to you doing it. I'm just telling you, it is not the case. And a lot of people are in this way of doing it. People that run laundry shops, people that run contracting shops, people that run construction work, people that do that kind of independent work are already doing it. And and you will often find that they're actually very wealthy. And you must have heard the millionaire next door expression. That's where this comes from, because most of the income that they earn is not taxed, or it taxed at a much lower rate for the same dollar-to-dollar comparison than your income is. It is true that it's stressful. I'm not going to lie to you. Doing this on your own, it is stressful, because now all of a sudden, where on an employee version of it, on a bi-weekly basis, income shows up in your bank account, and it feels like all you have to do is show up at work, you leave work after having done your job, and after tax income shows up. It just feels less stressful, right? Here, where I'm running my own business, I have to file for health insurance, I have to maintain that health insurance. There's a lot of little things that you have to take care of. So yeah, it does feel a little more stressful than otherwise. But you know what? The reward of a lower tax rate so much more overwhelms it, I can't even begin to tell you. And I would very strongly encourage you to at least look into it. As I said, I'm not sort of doing this podcast to help you create the paperwork, but I do have contacts of good CPAs that I use. I do have contacts of what needs to be done. I have advice on what the balance of stress and reward can be like, specific to your personal circumstance. So I'd encourage you to reach out to me for this particular advice if you find this podcast useful in that regard. That's what I have today. I know that I didn't get into the details of tax strategies. There's plenty of them around. There's CPAs that specialize in it. And I promise you that if you went down this road, either through my consulting work or otherwise, it will be work worth doing. You'll be shocked at how valuable this work can be. I want to grow this podcast, to like, comment, and subscribe. And with that, this is Finance Dad signing off. See you next week.